Camarilla pivots as an instrument trader, bond, who made this formula based on Fibonacci and market profiling. Camarilla comes from camera, which means a room, and can also mean a room that contains special people who can manipulate a market. This time we try to trade with Camarilla analysis. Like pivot points, Camarilla-based analyses have psychological levels. A brief history is a bond instrument trader who made this formula based on Fibonacci and market profiling. Camarilla comes from camera, which means a room, and can also mean a room that contains special people who can manipulate a market. Camarilla was originally made for trading on the S&P 500, but according to Nick Stott, this formula can be applied in all markets. How to calculate the Camarilla equation, where C equals closing price. Specifically in the forex market we use the closing market from the London market. Then it means closing market London equals opening market London this day. 1400 hours WIB, etc. off, add 1500 hours WIB, etc. on H4 equals, LL, HL/2 plus C dot H. 3 equals, LL, HL/4 plus C dot H. 2 equals, LL, HL/6 plus CHI equals, 1.1, HL/12 plus CLI equals CL. R HL/12 L2 equals CL. L, HL/6 L3 equals CL. L, HL/4 L4 equals CL. L, HL/2 H equals high yesterday. L equals low yesterday. Rules of the Camarilla equation. The levels used in the Camarilla equation are in practice only L4 and H4 for breakout trading, recommended for beginners, and L3 and H3 for reversal, bounce trading. While Li, L2, high, and H2 levels are only used as a guide for support and resistance levels. But now there are MetaTrader indicators that can be directly used, so we don't need to bother calculating them. Camarilla pivot point formula is the refined form of existing classic pivot point formula. The Camarilla method was developed by Nick Stott, who was a very successful bond trader. What makes it better is the use of Fibonacci numbers in calculation of levels. Camarilla equations are used to calculate intraday support and resistance levels using the previous day's volatility spread. Camarilla equations take previous day's high, low and close as input and generates 8 levels of intraday support and resistance based on pivot points. There are 4 levels above pivot point and 4 levels below pivot points. The most important levels are L3, L4 and H3, H4. H3 and L3 are the levels to go against the trend with stop loss around H4 or L4. While L4 and H4 are considered as breakout levels, when these levels are breached it's time to trade with the trend. How to use Camarilla pivot points in trading. Trading is done on the basis of open price on the next day. Since the market is very volatile in the first 15-30 minutes of trade and operator action is high, we prefer using weighted average price or the price after 30 minutes as open price. Depending on the open price there can be different scenarios. Case 1. Open price is between H3 and L buy when the price move back above L3 after going below L3. Target will be H1, H2, H3 levels. Stop loss can be placed at L4 level. Wait for the price to go above H3 and then when it move back below H3 again sell or go short. Target will be L1, L2, L3 levels and stop loss above H4. Case 2. Open price is between H3 and H4 buy when the price move back above H3 again after going below H3. Target will be 0.5%, 1% and 1.5%. Stop loss can be placed at UA for the price to go above L3 and then when it move back below L3 again sell or go short. Target will be L1, L2, L3 levels and stop loss above H4. Target L1, L2 and Case 3. Open price is between L3 and L4. Wait for the price to go above L3 and then when it moves back above L3 again go long. Target will be H1, H2, H3 levels and stop loss below L4. Wait for the price to go below L4 and then when it moves below L4 go short. Stop loss above L3. Target 0.5%, 1% and